Tech taking it on the chin yesterday and basically the past 2 weeks over inflation and rate fears. The Nasdaq getting clobbered, down now more than 8% below its record high. For more, we're joined by Alicia Levine, head of equities at BNY Mellon Wealth Management. Also, Paul Hickey is here, co-founder of Bespoke Investment Group. Welcome to both of you. It has been a tough 2 weeks, Alicia. I'm curious what you're doing about it, and whether you think it's going to continue to trend the way it has, or you think that this all of a sudden turns into some kind of buying opportunity.
Well, good morning, and thanks for having me this morning. Look, it's been a brutal 2 weeks for tech investors, but I think it's not entirely unexpected because, we've moved from talking about 2 to 3 rate hikes this year to including 4 and quantitative tightening, and that quantitative tightening happening much earlier and probably faster than the market had expected just a few weeks ago. So not unexpected. I think the first quarter will be a difficult one for tech as some of those multiples get squeezed and as we move into the actual hikes and market fears of tightening liquidity peaking. Having said that, I think on the other side of this will be a buying opportunity, and investors should think of this year in terms of quarters and not necessarily the entire year. Very, very complicated fundamental picture this year, a lot of moving parts, a lot of issues that are not linear. And so I think while tech will have a rough quarter, we will ultimately see this as a buying opportunity in the next few weeks.
So you say, but hold on, I just want to put a point of fact on this. You're saying buying opportunity in the next couple of weeks, but not buying opportunity now? I mean, that's, this becomes a whole sort of timing game then.
A little bit, because I think the squeezing out of multiples and the multiple compression is a process. It's not a day and it's not a week. And if you think about what happened last week, the market did a lot of work pricing in many more rate hikes and the recognition that QT was happening faster and not slower. But it was a little too easy. So we all felt relieved when tech rallied in the beginning of the week, but it was a little too easy. And I think this is going to be a process. So investors should expect volatility, should be looking for names that have net margin and earnings and invest accordingly. Having said that, those long duration assets and those long tailed assets, we do not think will recover and should probably not be part of investor portfolios right here. You need quality and you need earners in this kind of market when you have a tightening of liquidity from the Fed.